All right, guys, welcome back to another market recap. And just to look into what potentially we could be expecting this week. So pretty much straight across the board, there's quite mixed figures coming in. Pretty much you can see your Dow Jones, S&P 500, not really much happening in terms of gains. The Russell 2000 slightly down. The Nasdaq out of the lots has taken a bit of a beating, and we'll speak to that in a couple of minutes. If we have a look at just the US equity sectors here very quickly, again, your consumer staples is doing fairly well, energy is doing well, industrials are doing well, utilities, right down to healthcare is doing pretty much quite well there. Technology, communications, not doing so well today. Like I said, it's just a mixed bag. Commodities are doing extremely well, and I'm going to get to that in a bit of why that is happening. And then crude oil has slightly come down a bit, but pretty much your majors ended off on their highs on Friday. So there is a bit of a cool off here, but there's other undercurrents that are happening why you're getting this cool off. Crude oil actually did extremely well simply because of a cyber attack that happened on an oil line. So I'll get into that shortly, but there seems to be just a little bit of a cooling here, but crude oil is ultimately going to be popping up. If we have a look at the United States 10-year bond yield, that has gone down slightly as well. So typically what is going on is you're finding a lot of money is going more back into the debt market itself, and this is also sucking a little bit of liquidity from the majors. In fact, if we have a look at the US dollar, that is also slightly down. Now, I did state in my previous video that typically there is a inverse correlation between the US dollar and the oil. Now, it is also very rare, but it does happen where you'll see the US dollar and us oils going down slightly, but ultimately you'll see that inverse correlation correcting itself, and the oil going up. The US dollar will be continuously going down. So I'm very bullish, still extremely bullish on oil. And I'll speak to a couple of factors in on that. If we had to look and see what the Feds had to say, this is from the Chicago Fed president, and he believes the disappointing job numbers will be 1 month thing due to restarting the economy. So April's figures were quite disappointing. I think there was about like 260,000 jobs that were created for that month, and this speaks to why you're seeing a bit of volatility in here, simply because the markets is not really confident right now. The economy is not very confident right now, and I want to speak to that very quickly, where it states here, this is from Forbes, and pretty much what it says: declines in the 10-year Treasury yield generally indicate caution about global economic conditions, while gains signal global economic confidence. Well, there really isn't any confidence right now. As mentioned, April's job figures were abysmal, was pretty crap in the US, and this is why you're seeing a bit of lack of confidence and getting quite a mixed measure in the economy right now. But a good flow of that money is just going into bonds currently, and there's another reason for that. And the thing to be watching, again, why there's a bit of nervousness, is economic data will always be catching the eye. This week, the US consumer prices on Wednesday, and retail sales and industrial production on Friday. So the US consumer prices is pretty much going to bring home the fact that the US economy is currently in inflation. And this is just an educated guess, but I could be wrong. But I think the US economy is probably sitting about 2.4, 2.5, 2.6, right about there in terms of their inflation. So I think that's also going to spook the market a bit. Another factor that came into play is US gunman storms birthday party in Colorado, killing 6 people. Now, the stock market doesn't like this. It's interesting because a lot of this seems to be happening in Colorado. And this is the third one, I believe, that happened in Colorado now. And when the second one happened, the mass shooting, I think there was like 10 people that were killed. Again, it really did have a ripple effect on the stock market. So again, we're seeing this type of ripple effects because this does play on the psyche of people, and it does play on the psyche of the economy. another feature that's playing into play. Pretty much there's a lot of tension happening right now between Ukraine and Russia, but it's spilling over between the US now and Russia and also China. So there's a lot of bolstering that's kind of happening and talks of this like type of Cold War resurgence that is currently happening. So again, this is also having that little fear in the markets right now. So it is something to keep an eye out, because this is going to play for a couple of weeks, and you're going to see bolstering happening between Russia and the US and China and the US and things like that. So that's another thing that's kind of an undercurrent that's playing out right now. So as we can see here, Cyberattack on the Colonial Pipeline pushes oil prices higher, and it did go high, but it is slightly dipping a bit. You know, this is going to end up pushing the oil prices still quite high. But that wasn't the only factor that played on the oil side. So if we go over here, this is the Jerusalem Post. Mysterious explosion on oil tanker off coast of Syria. Oil loves war at the end of the day. So you're going to have this Russian and American and Ukraine and China type standoff, if I can put it that way. Oil's going to love that. Oil loves tankers exploding mysteriously, and oil loves when their pipelines get cyber attacked. Again, this is all catalyst to send the oil up, but it's going to have an inverse effect on the DXY, and the DXY is going to go down, and it will actually shoot below that 90 basis points. Right, so staying on commodities, I just want to quickly go and have a look at gold. And gold is doing well. So gold is back above the key $1,800 mark with further gains ahead. And I totally agree, because money is going to go back into safe havens. Now, the debt market is typically the bond market is typically your safe havens, but so is gold. So gold has that inverse correlation currently between the 10-year Treasury yield. So when the 10-year Treasury yield goes down, gold is going to go up. So that's looking good. Another thing as well on the energy side, if we have a look, the Dutch government gives $2.4 billion in subsidies to fund carbon capture plan. So in a nutshell, they're going to be building these like little, or repurpose these storage tanks and pretty much put CO2 in there. That's pretty much ultimately the goal that they're currently doing now. So they've been in touch with Shell and a couple of other oil and petroleum type companies. And so that's their plan. So hence energy is going to do very well. Your financials are going to do very well, because energy and financials are pretty much tied to each other, because the banks are investing heavily in energy. So hence the two are always tied together. So you're going to see that continuously doing quite well this week. And if we have a look, okay, so this ending off on cryptocurrency, Ethereum. Today, the world's second largest cryptocurrency soars above 4,000 US dollars for the first time. Why should it not reach 10,000 US dollars? Why not? So it's on an epic bull run right now. So yeah, if you're in Ethereum, congratulations, you're making some good time. And last but not least, the loser of the week, well, so far today, is Dogecoin. Now, Elon Musk kicks Dogecoin where it really hurts. So pretty much he's called it a hustle, and the price tanked 35%. Ouch. Ouch, Dogecoin. Ouch. So, yeah, I mean, that's kind of what happens when you invest in bullshit coins at the end of the day. Expect a very turbulent, mixed week. What's coming right now, commodities is the game and crypto is the game. So this is Chris Trade. Peace out.